All right. What is up, traders? What's up, tycoons? Super excited for today's video. We are going to be talking about TLT and, of course, TMF, all right, as the title suggests. But today's video is going to be one of the most important videos you watch related to the bond market. And it's something that I think a lot of people should be paying attention to. Now, the reason being is because we're going to go periodically and take a look at these different periods of time here at the Fed funds rate and at TLT and TMF and take a look at their performance all relative to each other. Now, the reason I say that this is going to be one of the most important videos is because we're at a point now where people do not know if the Fed is going to, finally stop raising rates, and a lot of people are questioning how soon are they going to start cutting rates. So you can never time the market, okay? But what you can do is try to prepare. So we're going to go through these different time periods so that way you guys can have an idea of what you need to prepare for and the potential environment that we're going to be going in, and, going over the risks of TMF versus TLT and taking a look at the comparison throughout all of these different time periods with the performance of, the Fed fund rate and in how the Fed fund rate affects these. Okay, so we're going to break all of that down in today's video, and you can see just how crazy high the Fed fund rate has gone here and how poorly TLT and TMF have started performing since the Fed has really gone on this crazy Fed rate hike cycle. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So, please be sure to read through the full disclaimer. I do want to mention, if you're new to the channel, I started a completely free newsletter called Investment Intelligence right here. There's a link in the description to sign up for it, giving out really good, free, valuable finance content. And I also like to sprinkle in some free trade ideas, right? This was a trade idea on Tesla a few weeks ago, and you can see how this one played out. We went over the conditions we were looking for, very profitable trade. If especially if you trade things like options, this was one on ExxonMobil. Again, going over the conditions we're looking for. In this case, we're looking for an RSI breakout and a MACD crossover. And sure enough, we got the MACD crossover and an RSI breakout, and XOM went from 111 to 117. Another very nice trade there, but not all of them are long positions, right? There's even short ideas in here for you perma bears, and we have a clear rising wedge here on the SWK, Stanley Black & Decker stock, and you can see we gave a projection of where price could potentially go, and it played out perfectly following that analysis. So if you guys are fans of free, valuable content, and you also want, a couple free trade ideas, go ahead and sign up for that newsletter. There's a link in the description as well as the comment section down below. And I started a Ko-Fi page, and on Ko-Fi, what you can do is you can come in here and you can click on the commissions page, and you can now directly book your 30-minute or 1-hour sessions. Okay, if you're not familiar, I do these sessions, one-on-one personal sessions every single week. Okay, and you can now, book them directly through the Ko-Fi platform. You can also come in here and request a specific video. So if you ever like me to, make a video on the topic of your choice, you can do that through Ko-Fi. We've already started to get some of the viewer requests through here, and I've got some more coming very, very soon that I'm about to record. And if you ever enjoy the free, valuable content I put out, you can always click on the buy a coffee button, and it's basically a simple way of leaving a tip or donation. Now, let's get into the meat and bones of the video. And, we're going to start off here talking about TLT. Now, some of the reasons you would invest in TLT is because you want exposure to long-term U.S. Treasury bonds, and TLT is targeted access to a specific segment of the U.S. Treasury market, all right? And you can use this to customize your exposure to Treasuries. Now, the objective of the TLT fund, it seeks to track the results of an index composed of U.S. Treasury bonds with remaining maturities greater than 20 years. So, it's not just the 20-year treasury that this thing tracks. Okay, it's the TLT is the 20-year plus ETF. So you can take a look at the number of holdings in here and the portfolio characteristics. You can take a look at some of the key facts, and go over some of the different things in there. Also take a look at the expense ratio. This is another thing you want to pay attention to. Relatively low here for TLT at 0.15%. And then TMF seeks a return that is 300% or negative 300% of the return of their benchmark index for a single day. So this is TMF was the bullish version, and TMV is going to be the bearish version. This is direct from their website, from the Direction website. and they basically are tracking the ICE US Treasury 20-year bond index. All right. So you can see the index bond maturities are 20 to 24, 24 to 27, and 27 to 30. Okay. And you can go in here, and some of the reasons and strategies that you would do this is because you're trying to magnify your short-term perspective with daily 3x leverage. And you can go where there's opportunity with bull and bear funds for both sides of the trade. Obviously in today's video, we're talking about the bull side, okay, with TMF. Now these seek daily goals and should not be expected to track the underlying index over periods longer than 1 day. All right. Now, so there's lots of risks involved with holding leveraged ETFs. We're going to kind of talk about those, but there are some myths that you can't hold a leveraged ETF and still see, gains. We're going to go over and show you guys basically the historical data with it starting now. So, if you take a look at when TLT and TMF were basically started, we're coming here at this April 2009 period. And what we're seeing, all right, is the Fed fund rate here in red, TLT in blue, and TMF in black. Now, as the Fed fund rate goes up, you're typically going to see bond ETFs go down. Well, why is this? Well, the reason being is because as the Fed fund rate goes up, and this usually means that Treasury yields are also going to start rising. The way bonds work is as yields rise, the price of a bond goes down. So we see the Fed fund rate going up, therefore driving up Treasury yields, and therefore driving down the price of bonds. All right. And as bonds go down, you're going to see that or as yields go down, you're going to see that the price of bonds actually go up. So if you notice this period here where the Fed fund rate starts to go down, you can see TLT actually start to rally. You can see TMF actually start to rally. Essentially, what we're looking at in this time period is this is a time period where the Fed funds rate basically went up about 30%. All right. And in this time period, you had TLT down about 15% and TMF down about 50%. So you can see it's, as described earlier, the fund is to give 300% returns of the daily value. Right. And so it's not going to always be an exact times 3. So, if you multiply 15% times 3, you get 45. But meanwhile, TMF was actually down 50%. So this is one of those environments where you're holding on to it. And even though you have, that you have the 3x leverage, you're actually suffering more than that. Okay. And there's, things called volatility decay, different factors into it, that are also going to affect the price of these leveraged ETFs. So this is a condition where one could say that, this is not a favorable condition to be holding TLT or TMF because you see the Fed funds rate going up. All right. Now, this right here is a time period where the Fed fund rate actually goes down. So we're seeing the Fed fund rate go down, and we see TMF is up a whopping 173%. And TMF is up 42.65%. So again, multiply that by 3, you're going to get roughly 120% is what you think the return would be on TMF. But in fact, it's actually 173%. So this is an environment here where it was actually a good time to be holding TMF, okay? And you're actually outpacing the returns of TLT much more than just 3x. So one would say that this is a positive. Now, what's really interesting about this is take a look at this period here, okay, where the Fed fund rate is starting to go up, and you also have TLT and TMF going up. So you're going to see these weird periods that you need to keep in mind could be a possibility moving forward, right, where the Fed may actually start to cut rates, and we could see, things like TLT and TMF actually still continue to go down. Okay. And so I just wanted to point that out that, we essentially have this period here where they're still continuing to make new highs, even though the Fed fund rate, actually started to rise here as well. Now, this is December 2011 to December 2013. And, you can see here as well, this is one of those periods where the Fed fund rate is going down, obviously, right? And what do you see? Well, TLT is actually going down. TMF is actually going down. Now, overall, in this time period, the Fed fund rate is up 28%, and TLT is down 10%, and TMF down 26%. Again, you're seeing that variation where it's not always going to be a 3x multiplier, okay? That 3x multiplier is on a daily basis is where you're looking to capture that 3x effect. And, that's going to, change the results over the long term over extended periods of time. But yeah, so, in this time period here, you're seeing this area here where it's very interesting as, the Fed fund rate is starting to go down. You're also seeing TLT and TMF both go down here as well. Now, this is January 2014 to January 2015. And right here, we can see that there's an increase in the Fed funds rate. Okay, so Fed funds rate is up 57% during this time period. TMF is up 141%, and TLT is up 32%. So, it's not always going to be that simple. Okay. Is Fed fund rate going up? Short everything, in the treasury market. Is the Fed fund rate going down? Long everything in the treasury market. It's not always going to be that simple. Okay. In a perfect world, that is how it should work. But this is why I'm giving you guys these literal real world examples of how things, played out in the past. All right. And so again, you're seeing that the multiplier here is much more than 3x. Okay. If it was supposed to be only 3x, it would, you would only be up about 90%. But in this time period, we're seeing TMF up about 141%. So, this right here would be another positive time, right? Another check mark right here. Good environment, right? So you have to have the right conditions. Okay. And if you have the right conditions in the market, then it could be a good time to get into TMF. If you're someone who wants that type of risk and wants that type of exposed leverage. Okay, there are certain conditions. And again, this would be one of those periods where it was beneficial to hold TMF rather than TLT and get that massive outperformance. Now we have January 2015 to January 2016, and this is where it's not a good environment to be holding TMF. Okay, so an X right here, right? Now the Fed funds rate starts going up here. TLT is down 3%, TMF is down about 10%. So, much closer tracking of that, 3x leverage. But as I mentioned, this is an environment here where you didn't want to be holding TMF because you're going to see, much greater loss than you would have been if you were holding something like TLT. Now we have January 2016 to 2017. And, here we're seeing this really interesting environment, guys, where again, the Fed fund rate is slowly creeping up during this time period. And look at what TMF is doing, right? Look at what TLT is doing. Both of those were actually, rising for the first half of this period here. And then in that second half, you can see the Fed fund rate really starts to go up aggressively. And what happens? Well, TLT and TMF both start to tank. Okay. Now, again, what's really amazing about this is look at the performance here. TMF in this time period was actually positive 2%, and TLT was positive 0.63%. So, just really, really interesting stuff that I want you guys to, see and be aware of. This is January 2018 to July 2019. And again, we're seeing this period here where the Fed fund rate is going up now, but look at TLT and TMF. Okay. The two of these actually rallied, and TLT went up 6.49%. TMF went up 19.26%. And then we have over here August 2019 through August of 2020. We can see the Fed funds rate is in this downtrend here clearly. TMF went up about 90% and TLT went up about 30%. So there you're getting that standard typical 3x leverage that people think of. But you can see this is one of the only times where it's actually been about a 3x performance. Oftentimes it varies from that over long extended periods of time. Now, this is August 2020 through November of 2021. And here we're seeing a period where the Fed funds rate was actually going down, right? And what do we see? Well, we see TLT and TMF going down here as well. And then as the Fed fund rate starts to bottom and start to rise again, and we see an increase in the Fed funds rate, look what happens with TLT and TMF. They're both actually rallying now too. And as rates pull back and we get a rate cut here, you can see that they really just traded sideways in this period. Now, overall, in this environment, the Fed funds rate went down about 20%, TLT went down about 13%, and meanwhile, TMF was down negative 38.1%. So obviously, this is one of those times where it was not the right conditions for you to be holding TMF. And here we have February 2022 through the present. And you can barely even see the lines for TLT and TMF just for them to fit on the same chart due to the, historic rate at which the Fed has actually increased their rates, right? The pace, rather, that they have been increasing their rates. And so now the big question after TMF is down over 78% and TLT dropped over 35% during this time period is it the time to buy TMF, right? Now, I make videos on TLT frequently. I typically do them every single week. And I have a lot of people in the comment sections who've been buying TMF for the past month, for the past 2 months, 3 months. They've been buying TMF for an extended period of time. I would even say since the beginning of the year. And the trade hasn't worked out in their favor. And the big question you have to ask yourself is, if you're trying to buy the Fed pivot and you think that rates aren't going to go higher anymore, you think that they are done pausing, or I'm sorry, that they are pausing and that they eventually will cut rates, you need to put a time horizon on it. All right, is one of the first things. And I would choose a longer time horizon. Okay. Don't come in here expecting the Fed to start cutting rates 3 months from now at the time of this recording, right? It's not very likely that they're going to cut rates in January of 2024. Now, it is possible, okay, but oftentimes the Fed doesn't cut rates until something is broken in the economy. And so if they do end up cutting those rates, it's likely because some very bad things are happening that you may not have prepared for. Okay, so you want to give yourself a time horizon, all right, a minimum of at least 6 months. But in my opinion, I think that it's very possible the Fed may not cut rates for an entire year, right? We might not actually start to see rate cuts until the third quarter or fourth quarter of 2024, if you believe the whole higher for longer policy. Okay. Now, at the end of the day, we're all grown-ups. We all make our own decisions. And so that's part of the decision that you have to make is, choosing your time horizon. Okay. Now, once you choose your time horizon, you still have to use risk management. All right. And as we mentioned, in a perfect world, as the Fed fund rate goes down, bonds should go up. But in this video, you guys saw that there's often conditions where the Fed fund rate goes down and, TLT and TMF can also go down. There's also times and conditions where TLT and TMF are going up as the Fed fund rate is going up. So it's not a perfect clear-cut strategy that works 100% of the time. And that was one of the main reasons that I wanted to make this video. So now, really, I just want you guys to let me know your thoughts, okay? Do you guys think the Fed is cutting very soon? Do you think they're not cutting anytime soon? What play are you interested more? Are you interested more in TLT? Are you interested more in TMF? I want to hear you guys' thoughts down below. So hit me up in the comment section. And in that comment section, don't forget, there's actually a comment in there. You can sign up for that completely free newsletter, right? If you enjoyed this video, you're really going to enjoy the newsletter, okay? And you can get those sent to your inbox every single week. And then you also want to check out that Ko-Fi platform, okay? Ko-Fi, if you're ever interested, you can book a one-on-one session with me. I do the 30-minute or the 1-hour sessions, as well as you can come on there and request a specific video, right? And, have me make a video for you on the topic of your choice, upload it to YouTube, and I'll try to get to it within a week. Just depending on how busy or how backed up the requests are, it may take a week, it may take longer, but the time span is, going to be generally from a week to a month. And I don't really think any of them will take a month. But, that's just in case they get really backed up there or something happens, I want to give you guys a time horizon on when to expect the videos at least.